Okay, hi everyone. This is Guillaume Pouza. I'm the founder and CEO of Checkout.com. We're a global payments business headquartered in London with 19 offices around the world. We're technologists at heart, and crypto has been a huge topic for us for several years. So I'm very excited to bring you an extraordinary panel today. We have the privilege of working with some amazing businesses, including those in the crypto space. And we've brought this panel of industry experts today that include our merchant, Chris Marcelek, who's the CEO and co-founder of Crypto.com, along with Kristin Moy, who's the global head of Link Onyx by JP Morgan. And finally, good friend of mine for many years, Zach Prince, founder and CEO of BlockFi.com. Let's start straight away about banking services in crypto. So we've all seen the huge impact that blockchain has had in offering new digital currencies as BTC or Ethereum. To get concrete, what are the services that crypto banking could offer in other areas of finance, and what makes them different from the traditional banking options? Who wants to go first? Zach, maybe?
Yeah, sure. I'm happy to go first. Hey, thanks for having me, Guillaume. I'm really excited to be here. So just in case anyone isn't familiar, and I think this will parlay well into what are services that crypto can offer that's a little bit different than traditional banking. BlockFi currently has a retail platform with 4 products. We have a product that enables folks to earn interest on their cryptocurrency and stable coin holdings, a trading product, a loan product where you can borrow against the value of your crypto portfolio, and a payments product where you can earn Bitcoin rewards from spending on a credit card. And if you just look at those products, you would say they're not that different from some of the components of a traditional retail banking stack. But what are some of the big things that are different from crypto financial services players like us in the traditional banking sector? I would highlight 2 right now, but there's probably a long list. And the 2 that I would highlight are, 1, folks are earning much higher rates in general, holding assets on cryptocurrency platforms like ours, where you can earn 8%, 7%, 6% on cryptocurrencies and dollar-denominated stablecoins, compared to the traditional banking sector, where in Europe rates are negative, in the U.S. They're very, very low. The other thing I would highlight is that cryptocurrency financial services are a lot more global than traditional banks. So BlockFi, and I'm sure also Crypto.com and others, we have clients in over 100 countries today. And we're still doing KYC and AML just like you would in the context of traditional financial services, but we're doing it on a much more global scale. So better rates and global accessibility are 2 things that I would highlight as key differences between crypto financial services and traditional banking.
Anyone wants to add to this? Or...
Yeah, I mean, I think what's really interesting about what we're seeing with crypto banking compared to traditional finance is that, essentially what we're dealing with is an emergence of new token-based businesses, and they in themselves have their own needs around, and now we're talking about like in the back end in terms of the protocols and how they're developed, but essentially they have like their own needs around pricing and how they market. Specifically, and most importantly, how they maintain and build their communities, and how they manage governance, and also specifically how they deal with like tech upgrades and hacks and bugs and now bots. So definitely a different animal when you're talking about banking the crypto industry as opposed to the traditional industry. I guess from the perspective of someone at the traditional bank side, and by the way, hello, I'm Kristin Moy. I'm from Onyx by JP Morgan. I basically built the blockchain, crypto, and digital assets program at JP Morgan in the past 6 years. But at least what I've been seeing and what I'm really excited about is that the crypto ecosystem is basically building an alternative financial system from the ground up with fresh eyes and a new point of view. As in, no one in the crypto industry is hung up with, it has to be done this way, or this is how it's always been done. And so without that mental baggage, what we're seeing is extremely rapid innovation in the space as it relates to capital markets, as it relates to payments, as it relates to loyalty, which I know we'll get into. And a lot of that is due to the nature of the crypto ecosystem, that it's built off of open source code. And essentially everyone is free to riff off of that and experiment and share ideas and basically grow together. So I'm really excited about the innovation that we're seeing in the crypto ecosystem and especially in the crypto banking space. However, in the world of regulation and as being a globally regulated institution, kind of see that, maybe we're going to have to work backwards from that rapid, amazing innovation to try to, fit into legal and regulatory frameworks as we know it.
If anything, this is what's interesting. So I think like this is a perfect segue. My next question is that obviously there's a huge boom in crypto trading in prices over the last year. I think we've all seen this, like, extraordinary volatility and growth in Q2. But there are now plenty of traditional players that are joining the crypto platforms to offer a range of crypto services to businesses and consumers. So it's no longer a consumer-only type of opportunity. If we think about opportunities and challenges with this convergence of traditional and new creates, if we look from a B2C perspective first, maybe Chris, from crypto.com, you have a very exciting, credit card that you're one of the first ones to launch. Maybe you can tell me a bit more about the strategy and how do you see the emergence of crypto services provided by more traditional financial firms playing out? I mean, how do you compete with a more traditional bank?
Sure. Thanks for having me, Guillaume. I'm really happy to be here with you guys today to talk about crypto and the future of the industry. Well, I actually welcome all the big players coming into the marketplace. I think it's a net huge positive for the industry to have guys like PayPal and a few others joining the fray, if you will. I think it's great for the consumer, but at the same time, we feel quite confident that we'll continue very rapidly growing the platform, simply because traditional players are a little bit slow for our crypto industry speed. I've been a company builder my whole life, and crypto is unlike anything that you've ever seen. This thing is 24/7, 365, and I don't think that traditional institutions can effectively compete over the speed of innovation, which is akin to drinking from a fire hose. The way we view this is that instead of traditional finance players using their massive scale and the regulatory capture to get market share, it's going to be crypto companies who now generate substantial revenues and are going to get regulated and apply for licenses or go for M&A to kind of close the gap with the incumbents, and then use this ability to innovate, to grab market share. So net super positive for the industry, and we love competing against traditional financial institutions.
Let's maybe take the perspective of JP Morgan. I don't know how much you can tell us, Christine, because like I say, you're coming from the other side. I'm a big believer that the incumbents and the large banks, it can still innovate, because maybe the crypto guys would say a fiat company like Checkout.com originally is an incumbent. I think we try to bridge between the old world and the new world. But what can you tell us from a JP Morgan perspective in your innovation in the crypto space?
Yeah, sure. And by the way, I love the narrative of, the big Goliath against, the small crypto companies. So, I definitely I'm about it. But in reality, I would have to say that I would say globally regulated institutions and banks like us will just play in a different way. And actually, it's great. It's actually better for everyone, because then it makes a space for companies like Crypto.com and BlockFi and Checkout.com to have the space to grow and build the services that consumers need. And so what I mean by that is, for example, JP Morgan, I know this isn't going to be clear to most people who read the crypto rags, but JP Morgan has been committed to the crypto space for more than half a decade. About 6 years ago, 5 years ago, we made an intentional decision to build on Ethereum, and we partnered with Joe Lubin and Consensus to launch the Enterprise Ethereum Alliance. I can't tell you how much we were mocked and ridiculed by the enterprise financial institution space, where they were like, why would you build on a public blockchain? Why wouldn't you just use an enterprise, focused distributed ledger technology solution? Why would you decide to use Ethereum? And we were very strongly convicted about the fact that public blockchain networks were going to be a thing, crypto was going to be a thing. But we had to walk people through doors, right? We basically had to start somewhere, and we were going to start with building on one of the largest open source developer networks that was growing very quickly and had the most excitement. I can say that, 6 years later, we're completely validated, where now all of these banks are coming in saying oh, I'm totally researching DeFi and I'm all about NFTs and everything. And we're like, okay, well, welcome, because we've been building on Ethereum for the past 6 years, happy to have you. In 2016, as an example, we partnered with Zuko and the Zcash company, actually researched zero knowledge proofs. We actually even wrote and open sourced our own zero knowledge proof, snark. And, basically from there in 2017, during ICOs, during token sales in that boom, we actually built our own ICO platform. We didn't call it then at the time. We basically tokenized bonds with our debt capital markets business and actually tested a $150 million Ethereum-based bond, sold it to a number of institutional asset managers. But it was kind of interesting to see the parallel between what was happening in the crypto space and what we were building in our, walled garden. From that project where we tokenized bonds and actually, we're building financial instruments on Ethereum blockchain, that was actually the birth of JP Morgan Coin, where we were like, okay, so like we can create these bonds, but how do we actually settle them? It would be totally bizarre to say like we're going to have these tokenized bonds on a blockchain, but then we're going to send Swift messages to basically make the payments and then have to send an acknowledgement to the blockchain, et cetera. So how do we actually have the attributes of US dollars on a blockchain? And, that obviously, as you know, mirrors what we've seen in the crypto space around the advent of stablecoins like USDC and Tether, et cetera. And then most recently, we were heads down for a couple years, because we were trying to make sure that we were making things real and we weren't just, spouting out ideas and building prototypes, which most of the financial industry has done. But, most recently, we launched an intraday repo product. And so for those of you who are not familiar with what a repo trade is, it's like a secured loan. Like basically I lend you $100, you give me $100 of collateral, and vice versa, and it gets automated via smart contracts. However, doesn't that sound almost like some of the collateralized lending protocols that we see in the DeFi space, especially built specifically through smart contracts? So, basically the bottom line is, I know from the outside, it seems like traditional banks are small and are slow. And I definitely can't speak for the other banks, but I can definitely say here at JP Morgan, we are definitely tracking as quickly as the crypto markets are developing, and we're just playing in different ways. So, what I mean by that is we can't actually deal with the outright crypto because of the regulatory uncertainty. However, we are supporting the crypto industry in ways that are not obvious. 3 years ago, or 2 or 3 years ago, during the crypto winter, when it wasn't in vogue to be in crypto, JP Morgan actually made an intentional decision to bank crypto exchanges. So it's reported in the Wall Street Journal. We're actually one of the global banks, or probably the only global bank, to bank crypto exchanges like Coinbase and Gemini, basically in a time where global banks were closing bank accounts. And we're one of the first banks to clear Bitcoin futures, basically supporting different parts of the crypto market without touching the outright. So, and then, I think now this year, we are one of the lead investment banks basically taking crypto companies public, leading Coinbase's direct listing, and then also, taking a North American Bitcoin mining champion, Cypher, public. So, I definitely welcome the challenges, and I think the challenges increase the competitive speed of which, traditional firms will operate. But yeah, basically we'll have to say, at least for our part, we're definitely moving.
One thing I'll say as a natural optimist, because I have to respond to this, is that what we see is that the consumers are going to benefit out of this, which I think is what's most important. From either the incumbent or the players, there is innovation, and it's good for the financial services and financial systems to be pushed for more innovation. And I think it's exciting to see both JP Morgan, Crypto.com, and BlockFi push the innovation so that ultimately users benefit in the long run, because I think this is what's most important. Maybe Zach or Chris, you want to say something? Otherwise, I'll switch gears and go into NFTs, which is always very topical at the moment. Okay, NFTs. So, the truth is, right now, everyone, when we talk about crypto right now, up to like a few months ago, was always about the investing. Is it an asset class? Is it a currency? Lots of discussions around this. Now we have the boom of NFTs, OpenSea, Axie Infinity, very big topics, grabbing the headlines. We're seeing more and more people spending their crypto too on these NFTs. There was a research from Cornerstone Advisors, which Americans are holding cryptocurrencies purchased $31.2 billion worth of retail products and services using Bitcoins and other cryptocurrencies last year. So maybe from Chris' point of view here at Crypto.com, if you can give us a bit of an evolution of crypto spending in recent years and what kind of innovation we might see from your company and others around crypto spending just in general.
Right. So I think if you look at the spending patterns on our Visa program, which is the largest crypto card program in the world today, live in US, Canada, UK, continental Europe, and across Asia Pac. It's not unlike what you would see on any modern credit card program. I mean, people just use it on their daily expenses, and they're happily earning their their crypto rewards because they believe in the future that it represents. And on that front, I don't think it's going to change. We will continue taking market share away simply from traditional players because our product is more attractive. Obviously, if you look at spending trends more broadly, like if you touched upon NFTs and other crypto assets, the way we look at this is less about where it is today and more what it represents in terms of a broader trend for the market. And I think NFT is simply an entrance point, and then you're going to see expansion of the use cases in crypto space into things like blockchain gaming. We're super excited about this because gaming in general is about 3 billion MAUs versus, according to our in-house research team, the cryptocurrency space just crossed 200 million in the first half of this year. So we could just 10x the reach of cryptocurrency space in general if we saturate this new use case. And I think NFT is just this first point of utility, and then you will see it deploying into those ever broadening circles that allows us to drive global adoption of crypto. So we are super bullish on the potential of this industry in this decade, and I think people will see very rapidly the conversation changing from, oh, this is a way to get better yield. This is a speculative asset class. This is a way to grow your wealth. And very quickly, it's going to evolve into, this is simply the next version of the internet, the Web3 that we're building here, and it's going to touch every single aspect of our lives, including games, new social networks, and such. So I really stress here that people should be looking at NFT in terms of the underlying technology and what kind of possibilities it opens up for the builders rather than what it is today.
I'll ask more questions on NFTs later. Typically, how many NFTs do you own and which ones is your latest one? So you can start thinking on the question because I am sure there is a JPEG somewhere there for you. Still staying maybe on the banking a little bit, just in terms of like adoption, because before we go full on NFTs, there's a big learning curve when it comes to the adoption of crypto. I think that's one thing. We're still in the early adopting phases, and we would see this different between regions. Of course, companies like Coinbase or Gemini have pushed this a lot in the US. It's not something that is across the world similar. If I had to ask you, Christine, to explain some of the differences between the services offered through traditional bank channel compared to those offered through crypto, how would you see the customer acquisition grow in crypto banking, and how can established players add to this integration? So what is the strategy essentially?
Yeah. I mean, as it relates, and just building off of Chris's comments from a Crypto.com perspective and from using crypto for payments and facilitating crypto spending perspective, I think we're right on the cusp. And it's taken me a little bit to try to figure this out. I mean, on face, spending with crypto has not seemed to make a lot of sense, especially if you understand the strong community culture of hodling. But basically, I guess what we're seeing now is that there's this large swath demographic where they actually prefer to keep all of their wealth in crypto balances, which was not the case maybe a few years ago, or maybe that was a smaller subsection. Now it's a larger subsection, and now it's definitely a millennial and beyond generational type of thing. And so if you're creating a lot of your wealth or most of your wealth in crypto balances, as much as you want to hodl, you're definitely going to have to spend it on something. And so enabling convenient spending options is definitely important. And that's obviously what companies like Chris's and Zach's and yours are facilitating. I think from my perspective, covering all of the large retailers, the large marketplaces and e-commerce companies, we're seeing these larger companies get more crypto curious. And we're not quite there in that they're not exactly saying like, I must have this, I need this. They're still kind of like, wait, so what are you guys doing? Like, do I need to do something here? And what that tells me is that they're seeing something, right? Like these are reverse inquiries. We're not selling anything about this, but like they're coming in, they're saying like, can you tell me, like, do you have something? Can you tell me what I need to know? They're starting on this journey, which means they're seeing pockets in all of their data that something is happening related to the crypto industry, and they need to get ready and they need to get educated and they need to be prepared before it becomes a fever pitch. Now, regulatory uncertainty makes the timescale unclear. Sorry, the bank person got to keep talking about the regulatory stuff. But I think what's clear is that what we've learned about technology in our lifetime is that if it can happen, it will happen, right? And so, whilst there are criticisms about whether or not crypto is the most efficient mode of payments now, yes, no, not. Whether or not it's efficient or it has privacy gaps or it's hard to use and it's clunky. I mean, it kind of is in some cases, not when it's interfaced against like the companies like present here today, but if someone's literally trying to deal with their MetaMask and trying to map networks, it is clunky, right? One could argue that perhaps we are quite like how we were in the 1990s when we had to dial into the internet via the phone line and, we would get disconnected and everything was slow, right? I mean, but where are we today? Where essentially we have, Wi-Fi, everything, we have mobile, cellular, everything, like our cell phones, like glued to our faces. So, I would say that, the wave is coming. We're probably right at the cusp. I think what it looks like is, basically a lot of conversion, on-ramping and off-ramping between fiat and cryptocurrencies to start, because at the beginning, like the large retailers will not want to be holding crypto on their balance sheet. So there'll be big importance of like, can you make it seem like I'm accepting crypto, but I don't actually want to take it because I don't actually know what to do with it. And then as the wave continues and, basically companies and people get more comfortable with crypto and how to manage it, you'll actually see them start managing it like FX risk. And then in which case you're going to have the traditional services of FX hedging and treasury management that you have with all the global currencies, just with crypto and crypto tokens. So that's kind of how I see it evolving as it relates to the crypto spending point.
What's funny is that you're giving the perspective of the bank and the incumbent here with all the experience that this entails, like going like in FX hedging, which is a perfect segue actually in my next question is that we've talked about crypto now for the last 20 minutes and a lot about how the traditional players are entering the crypto space. But I mean, there's an argument that the crypto players could now enter the traditional banking space because they're building very modern, tech infrastructures, mostly cloud-based, like a new approach to banking, which we discussed originally. So maybe starting with you, Zach, is maybe BlockFi one day thinking of entering the fiat business? You've got like pretty much the stack ready to go. You could just switch to currency.
Yeah, I mean, look, stable coins, for anyone who's not familiar, there's a few different varieties of them, but just think about putting $1 on a blockchain. This is one of the fastest growing areas of the cryptocurrency market. So I think stablecoin, balance is outstanding. At the end of 2019 was around 3 billion. At the end of last year, around 20 billion. And today it's well over 300 billion. What you're seeing with these is global demand for dollars, both as a currency to save in and earn a yield on, but also to transact in. So to play on some of the themes that Christine and Chris were touching on, I think you're going to see traditional payment companies like Visa, who have helped power card products for companies like Crypto.com and BlockFi. You're going to see them also integrate crypto-specific payment rails. So they're leaning in very heavily to stable coins. And I think it's unclear right now what blockchain this is going to happen on. Is it layer 1 or layer 2? And there's a lot of technical details to sort out. But I think in addition to cryptocurrency rewards or spending being integrated into traditional payment platforms like card-based payment platforms, you're also going to see things go the other way. Where the card platforms will, integrate it as an underlying settlement currency, or services like Lightning, where it's integrated for tipping now on Twitter, will gain more adoption, and you'll see some payment streams go away from the traditional channels. But we have a subset of our clients at BlockFi now who own 0 cryptocurrencies. They only use our platform to hold stable coins and earn 8% interest on their dollars. And one area that JP Morgan isn't in yet, and they probably won't be in for a little while because the regulatory stuff is really hard to figure out and the capital requirements haven't been defined yet. But one of these areas is lending dollars into the crypto ecosystem. There's a ton of demand for dollars in the crypto ecosystem. And being on the supply side of that equation, holding stable coins at a platform like BlockFi or crypto.com can be attractive for someone that has a very different risk tolerance than maybe someone who's buying NFTs. I mean, we're talking about just earning 8% a year, not, like buying something that has a really high volatility and that you're looking for a 5 or a 10x on. So I think services like this that are really attractive to a different use case than what crypto has been known for historically with high volatility trading is going to help draw people in. And they're usually surprised, and it takes a long time for them to understand. Like, I can just wire my cash in, it earns 8% interest, and then I can take it back out as cash. And you're like, yes. And they're like, wow, that's pretty cool.
So one thing here quickly, because we have a very broad audience today, I need you to go and explain for everyone what is a stablecoin. So we just make it clear, because we've got a lot of we're a sophisticated group of people here, but I think I want to make sure that everyone in the audience understands the role of stablecoins. Like you said, they've been growing tremendously. It's hundreds of billions of dollars right now. Like you said, regulation is also coming in. I mean, the US SEC and central bank is definitely looking at it. But if you had to explain it in simple terms, let's just maybe go for this quickly.
Yeah. So imagine if you have a, if you have a PayPal account or a Venmo account or whatever the most popular fintech app that people send, payments when you're splitting the bill at dinner with friends. You can think of a stablecoin as being similar to the balance that you have in that PayPal account, but the big difference is that it's managed on a blockchain. So you can use it outside of that service where you acquired it, and you can transfer it around. There's a few different variations of stablecoins, and there's a lot of questions around which, stablecoin model will win and how it's going to be regulated. But I think the simple conceptual version is you've got $1 in this online platform, and then that dollar is backed, by $1 in a bank account or, permitted investments like US Treasuries. That's what USDC, which is the most regulated in my opinion, and has the most traction. But there are others. Tether is more popular than USDC, but it's less specifically backed by assets. And then there are some which are more on the frontier, where they're algorithmically pegged to the value of $1. But in every case, they're trying to accomplish the same thing. It's that use case of being able to use $1 in some online context. And the big difference in innovation is just that stablecoins aren't restricted to just being used on whatever that platform is where you got them the first time. You can move them around to a lot of other places. And when you do that, it doesn't touch the traditional payment rails.
Yeah. And I think
sorry, go ahead, Christine.
Yeah, no, I was going to add, it's certainly been gaining in momentum, and it's quite interesting how people are using it. I've been hearing anecdotes by, those that are in the crypto industry, that there are actually new fintech businesses or crypto native businesses that don't even open bank accounts anymore. I mean, alarming for the bank to learn about, but they're not even using bank accounts anymore because they will, accept payments or make payments in USDC and actually pay employees, do payroll, everything that you would do with your bank, kind of happening, with USDC on public blockchain rails. Obviously not for everyone, and it's going to take a while for, mom and pop to be adopting USDC like that. But I think, again, you can see how the disruption is happening at the edges with some of these forward-thinking, probably maybe more risk-tolerant companies where, they're just operating their businesses completely differently.
I'm going to make a safe assumption that all 3 companies that are speaking today will play a big role of this in the future. And I'm actually quite excited to have you here because I know you're at the forefront. I'm going to just zoom back on Chris, because ultimately we give the BlockFi perspective. Chris, you're also like obviously at the forefront of building a platform, like you said, in all countries, largest visa program. Do you see yourself just like one day going fully? Because the real question was about fiat. We switched on the stable coins, but like, is it possible one day to just have fiat and have people that have essentially wallets that hold, digital currencies, the stable coin, and the US dollar? Because I think like, one thing that will not disappear is that the US dollars and general currencies, they have a purpose to play in society. So do you see yourself having, the fiat currency as part of your strategy long term? Or is it impossible for somebody who's crypto native?
Look, I think these things are going to converge. And even today, when you download the Crypto.com app, and a lot of people did, you see, your cryptocurrencies and your fiat currencies side by side, and you can use both. But there's an element of magic when you give somebody a digital dollar and you show him how it moves from A to B without an intermediary, and it costs like 2 cents, and it's truly global, and it didn't change in the last 5 years. It's such a powerful tech. And the way we look at this as a company is at this question, like, okay, should we be doing fiat stuff more? Is quite simple. We always try to disrupt. If we will be able to launch a product that can capture people's imagination and allow us to acquire customers at scale and satisfy a real need in a way that it's not done today, we will do it. And again, there's a number of companies in this space today that are working on payment use cases, lending use cases, you name it. Basically, every single finance use case is going to be reinvented and is going to be disrupted by crypto companies. And you just need to remember, like, what's in it for the consumer, what's in it for the customer, right? They don't really want to understand how does a blockchain work, what's proof of stake, proof of work. They care about other stuff, right? How much interest am I paying on this loan, or what's my cash back, and this type of stuff. If you can disrupt and you can provide a better service to the customer, go ahead and do it, and make the user experience so seamless that the technology, no matter how complex it is, it just disappears. So that's what we're going to do. And I think, again, more and more companies from our space are going to attack the traditional turf of the incumbents and try to disrupt. And I think the incumbents should be expecting it. In fact, I'm really not worried about bank coming into our space. I think if I was at a bank, I would be worried about doing it the other way around. And Christina, I understand that you guys are doing a lot of great work for our industry, and we all appreciate it. But JP Morgan is not really in the same kind of business like customers side of it. So we're kind of talking about two different segments of the market.
One thing I'll say is JP Morgan is servicing me as a customer at checkout.com, and we're able to offer all these great services to a crypto company thanks to them. The truth is they have a real role to play, and I will give them a kudos because they're like an amazing bank that we're very happy to have as a provider. I do believe, and I'll just state this as a moderator, is that there is a role for everything and everyone. And it's not going to be 100% crypto world, and nor it's going to be 100% fiat world. And if anything, what's important is that, we create value for the end user. So I really like the spirit of your answer. One thing I will say, though, is that none of this is possible without regulation. And right now, we've, lived in a world that was mostly done without it. When it comes to regulation, there is a lot of anxiety about the crypto banking in general and the speed at which it's developing, where quite often, it's developing much faster than traditional finance. In the last few weeks, we've seen a lot of mixed messages from regulators. What do you think is the current back and forth with the regulator mean? How do you think regulations could change where crypto banking is headed? Because clearly, the yield on USDC is something that has impacted some of the companies who are actually banking on it. Maybe Christine, for you, because with all the experience of JP Morgan running a regulated and global business, you have a perspective you want to share.
Yeah, sure. I think that I have a very mixed mind about it, right? Because I think that if you put on your crypto hat, like sometimes you may think, God, regulation is, going to be stifling. What is it like? It's going to slow down innovation. There's going to be more overhead. But I think from, a true mainstream innovation at scale perspective, which is kind of how we think about things at the bank, like how do we, scale to the millions of users and businesses that, we want to get to, it could be a good thing, right? So sometimes I confuse myself on, how do I think about this? I think that where it could be good is that where regulation will outline what you cannot do, in the same vein, that will help you understand what you can do. And, I think what's difficult, especially for us as the globally regulated institutions who are not at all comfortable operating in the gray area. And that's why, we kind of stay back and say, let's do everything but touch the outright crypto. Let's support the industry in other ways that we know how, in the ways that we feel, where the guidelines are clear. I think that where you have some guidance, and hopefully the right guidance, where you'll have clear, sort of guidelines on this is what you can do. And, all of the crypto companies that you see here are, very creative and can move very quickly. And all the businesses will adjust to, okay, if this is what you're saying we can do, this is what we're doing. And this is how we're going to add value to our clients. And this is how everybody's going to, benefit from this. So, I think, and then from my perspective at the bank, if I'm like, okay, so this is what we can do, then it's like, okay, so how do we get the millions of our users and the millions of businesses to get on this? Because so far, at least, those that we can corral into the space, the investment that we can put into the space is, kind of tempered in that, yes, we see something here, but we're not quite sure, it's not clear if we can do anything. So therefore we're not going to do anything. So let's hold back and wait. So, I could see it bringing an incredible amount of investment into the space once it's clear what we can do. And, I see the crypto companies moving very quickly to adjust.
We'll certainly level the playing field. I think one of the questions that is always going to be there as well is the decentralized versus centralized. So especially in crypto banking, there's a clear distinction between the two. In the spirit of helping the audience really understand this, the benefits of one against the other, maybe Chris, you want to give you just the benefits of each in your perspective on a centralized versus decentralized approach?
Sure. So this touches the very core of crypto. So centralized means that there's a counterparty to all your transactions. Somebody's custodying your assets and taking care of your account, and this is done off chain. In decentralized solutions, you can interact directly with smart contracts that live on chain and generate yield, lend, borrow, send money around, but you're kind of on your own. The benefit of it is that you really can execute all these financial transactions without an intermediary. So this affects again the innovation and what kind of new cool stuff people can build with the Legos in DeFi space today. Right. So both have their strength and advantages and disadvantages. I think for quite a while, you will see that centralized platforms that are regulated, Crypto.com is a regulated business today with about 49 NPLs, and we've got an electronic money institution license and a FAST license and an AFSL in Australia. Basically, it's a globally regulated platform today, right? So we are able to onboard millions upon millions of customers into this space, to then use it as this important bridge between the two worlds, and they can move from fiat to crypto. But then if they want to interact with the DeFi contracts, we also have a non-custodial wallet, which allows them to do so. I think over time, it would be naive to think that the DeFi space will remain unregulated as it is today. It's only tolerated today because it's still relatively small. But once it gets to decent size, and we've seen already certain signaling from the regulators around the world that the regulation is going to be pretty much the same. It doesn't really matter in what method the funds move around. You still can't transact with people from countries that are sanctions list, and you have to take care of AML and all this stuff. So there is going to be a substantial level of new difficulty for the regulators to actually go in and do it, but they will find ways to regulate that space as well. And one last thing I want to touch upon is that again, there's this tension even within crypto space. This is the centralized platform. This is the decentralized platform. I think there's a number of centralized platforms that understand the value that decentralized platforms provide, and will very aggressively invest in these areas to drive innovation and drive utility in a safe manner for the users. And Crypto.com has this kind of view. We believe in the decentralized ethos, but at the same time, we have a very deep understanding that you can't onboard hundreds of millions of customers in an environment where it's not regulated. It has to be regulated.
I have a centralized question from a feature perspective then, because that's one of the latest innovations we've seen is like one of the revolutions on the horizon is loyalty programs. Good friends and long-term customers of Checkout. Last week we were reading about Revolut, who broke the news, and they're planning to launch an exchange token that they could reward apps users for their loyalty by reducing fees, a bit like the American Express point, but just actually the new version of it. So this is maybe a question for everyone. It's again a different take on something that has been existing for a very long period of time. Is this something that you see yourself, doing into your own apps and company, or is it something that is too old already?
I wonder, where did they get the idea from? Yeah, I think imitation is a very high form of flattery. So I would just say thank you.
Yeah, so we don't have a token at BlockFi currently. We don't have any imminent plans to launch one, but we have we were the first credit card in the U.S. to offer Bitcoin rewards as the cash back, and we've done some things with that card where we have other benefits on the platform if you're a card holder, and I think just like JP Morgan has different tiers of retail banking and airlines and other companies that want to reward loyalty from their consumers, give folks incentives or bonuses. I think you'll see a ton of innovation there with cryptocurrency as well.
Yeah, and we think, from our perspective, we think a lot about this. Chase banks with more than 70% of U.S. households, and we obviously have loyalty programs like Chase Sapphire. I think NFTs, exchange tokens, like this idea of like tokens to boost community and engagement and loyalty is very interesting. Like, just imagine, I mean, obviously I have no idea like what this Revolut token is going to look like, but maybe this token will reduce fees up front, and that's something that's very useful for users. But what if that token can also be your ticket to like a cool concert in the metaverse? Or what if that token can give you like locker room access at like the local stadium in the real verse? Or what if you can get a discount on like a partner airline with that token? How are you going to feel about this Revolut token, and how are you going to feel about trading on Revolut if you are able to capture all of these experiences that are relevant to your life, that are both entertaining and engaging and fun, and also kind of add to that like digital social flex? So I think that there's definitely, it sounds like Chris, you've been leading the charge on this, but there are definitely going to be more. There's going to be more and more innovation in designing of these incentives and loyalty programs. And I'm super excited to see, this happening, because this is almost like how maybe the pivot point in which larger companies will start getting into the game.
If anything, what's exciting is that, again, it's optimizing or like solving for the customer, which is something that is always important. Like, if you create value for customers will come. And it seems that, this is clearly reflected in the three companies. Thank you very much for like the, awesome discussion. Like we always do now, we are going to fire a few quick questions. So I'm going to set the order. Zach, I'm going to put you first because you were the last one showing up. Then I'm going to go with Christine, and I'm going to go with Chris. And please don't overthink it. So when is the last time you used cash to make a payment?
Yesterday. I'm in New York City. There's a lot of people that only take cash here.
For me, I had to take a bus a couple weeks ago, so I had to get cash and coins to do exact change. I didn't have it. Like, the guy kept my $20 bill for like the whole ride until like the end. So yeah.
yesterday, because Hong Kong is at the same level of innovation as New York, so paying for car park fee with cash.
Can you pay with a Bitcoin somewhere in Hong Kong you're parking, or it's impossible?
You can pay with a crypto.com credit card, but not directly. Not directly. There will be a few places, but it's not adopted at mass yet.
The binary question we always ask, and it's no strings attached: the price of Bitcoin at the end of the year, up or down?
Up for sure, a lot. I'll say it will be over 100,000. I think 116,000.
I'm gonna pass because I don't need like press saying like JP Morgan says Bitcoin's going to 200,000.
All right. I never give price predictions. I'm gonna make an exception for you, Guy. I would say that I expect an all-time high this year.
So actually keep going back up. I mean, the one thing, it's like just never stop surprising. What is the most interesting NFT you own? I said I had the NFT question coming, so you had time to think about it.
I just bought one of those horses. I don't know if anybody, I forget the name, but there's these
Omniforce, like the 0-1 force.
Maybe like I don't even know what I'm doing yet. I'm not big in NFTs. I bought my first one like on last Friday in our office because someone at BlockFi showed me how he's like breeding his horses and racing them, and of course making all this money in the process. And I was like, I'll buy one of these. So whatever that, I don't even know what it's called. Whatever that is, that's the first and only NFT I've ever bought.
So you have a horse. You have a Zed-Run horse.
Yeah. Zed-Run. That's it.
Zed-Run, D-Race, and I think the Crypto.com Capital put money in all three of these companies. These guys are awesome. This is such a cool thing.
Yeah. Okay. So for me, I have like a bunch of random NFTs, but nothing that has like made me billions of dollars, such that I'm like not working at a bank anymore. But what I'm really interested in is something that's NFT adjacent, which is Yats. I don't know if you've heard about them, but this is basically like where you can take unique combinations of emojis and buy them, like domain names. Basically, kind of, I don't know. I think a lot about how like the future internet world is going to be about having multiple identities, and some of those identities will be pseudonymous. And so, I'm really fascinated about this idea of people identifying themselves or making payments to unique combinations of Yats. So like instead of saying like pay me at Christine Moy, like at my alias, it'll be like pay me at Diamond Fire Shark. That's my Yat. And it's kind of interesting to see how basically you can combine these like apparently emojis are the most popular keys on the digital keyboard, and obviously it surpasses like across languages and across countries. So we'll see how digital identity shapes up, but really excited about Yats. Yeah,
I have mixed feelings about this question because I'm worried that my wife is gonna watch this and then she's gonna find out I've got like hundreds of NFTs, and I don't want to even mention how much I spent on this stuff. But Crypto.com as an NFT platform, it's now an open marketplace, and we've had some amazing artists launching with us over the last 6 months. Boss Logic, for example, I put a lot of his stuff. So, yeah, super exciting space. I think everybody should check it out. The level of quality that is coming out of this space in terms of the art is just mind-boggling. And again, the appreciation is also an aspect. So I encourage everybody to check it out.
I'm not going to ask if any of you has a crypto kitty because you're all like early adopters. It's not going to be Zach because he said he only had one. The early adopters that have been very smart on NFTs. Let's finish on something positive and just completely optional. If you have only one prediction for 2022 and the crypto blockchain world, what would it be? Optional, only if you want to.
All right, maybe I'll go first. We're at a little over 200 million people in the crypto space right now. We're going to hit 1 billion next year.
Nice.
Ambitious. Love it.
I guess we're working backwards. I think my general prediction is that regulated DeFi probably becomes a thing. in some ways. I mean, it's not going to be like immediate and like all, but maybe in some pockets there'll be some evolution towards that.
I would say the space is going to keep growing, and you'll be surprised by, we'll be pleasantly surprised by new market entrants, whether it's other countries doing things like El Salvador, or Christine or her peers in the U.S. Doing something on the retail side for the first time. I just think you're going to see continued adoption from corporates, governments, and other institutions.
Yeah, I
Super
mean,
exciting.
what I want to see is like retailers just quoting prices in like ETH and Bitcoin. I know that like within the ETH community, people have been talking about building add-ons on that, but having mainstream retailers do that, maybe obviously something checkout.com can help with. But so yeah, I would be super excited to see that also.
As one of the world's largest e-commerce payment processor, processing hundreds of billions of dollars every year, I can certainly work on this, but I cannot talk about it right now. The one thing I will say, this is a super exciting conversation as always. So thank you very much, everyone, for listening in today. And thank you to our excellent panel for fascinating discussions. I hope you'll join us for our next virtual event in 2022, and hopefully we can verify those predictions. The last thing I'll say is that you can learn about how checkout.com is partnering with crypto businesses around the world at checkout.com/crypto. Christine, Zach, Chris, thank you very much. This was awesome. Thank you.
Thanks for having us.
Thanks, Guillaume.
Thank you.